Alright, welcome friends. So in this video I want to cover some of the things that you have to understand when it comes to the upcoming staked XRP using the Firelight approach, okay, and Firelight protocol. So what is this and what you should know about it, because this is different than regular staking protocols, so to speak. And before we begin, please keep in mind that this is mostly theoretical approach because the protocol is not yet live, but the word staking and the common understanding of how in crypto market staking works is a bit of a different, because as you know, and as you may think, that once this goes live, you will be able to stake your XRP and actually earn some sort of a yield, as you have on most of the yield-bearing blockchains. For example, you have Solana, you are able to stake Solana, get LST tokens as a proof of your staking, and then eventually earn the actual real yield. While with XRP and native XRPL, this is not possible. So staking is a word being used here, but it's not the actual mechanism of getting an actual real world yield through the actual XRPL or even Flare chains. This is a bit different. So as you may know, Firelight is the protocol that is launching Firelight vaults, and it's going to basically enable staking for XRP. But it's not the same staking as you would expect on other blockchains like ETH with Lido, like Solana using Marinade, Jupiter, all of those other ways, Sui as well, etc. It's not the same approach. It's fairly similar, but it's, on the other hand, it's a completely different story. So as you can see, Firelight, they've been mentioning and teasing us with the launch that it should be this month in November, and essentially they will launch the staked XRP vault. So as you can see, the wait is almost over. The last day of October, we are checking every box. They're testing everything, and the phase 1 is gonna be launched. The way it's gonna work is pretty much similar to what the F assets provide. So you have the native XRPL and your native XRP, the ones that you have in your ledgers, maybe exchanges. If you hold the XRP in a centralized exchange, don't do that, okay? Withdraw it to your wallet, ledgers, cold storage. Even Ledger is not the best idea. There are multiple ones. The ones from Korea, those are really good ones and pretty much I wouldn't say unhackable, but I mean, Ledger is not the greatest place to store it as well. And make sure to store your cold wallet in a Faraday boxes, okay? Don't ask me why, just do it. Now, you have a native XRP, and now we have the Flare assets, right? Flare assets, so you have the fXRP as well. So you are able to mint fXRP from your native XRP, and we all know how it works. I covered on my channel what you can do with your fXRP, CBXRP, etc. So this is going to be a new kind of token, once again, which is going to be called staked XRP. So when you have your fXRP minted and in your wallet, maybe you deployed into the liquidity pools, etc. Maybe you deposited to Kinetic and you are borrowing against it, etc., etc. It's all good. Now the Firelight will enable a Firelight vault where you will deploy the fXRP into the vault, and the vault, as a proof of your deposit, will issue LST, liquid stake token, called staked XRP, stXRP, as you can see. And this staked XRP will be in your wallet separately as a separate token, but it will eventually and essentially so to speak, will represent the actual fXRP that you stake. So the value is going to be the same as on XRP. The only difference is that you're going to be basically owning in your wallet a staked XRP, while the actual fXRP that you deployed will be used within the Firelight vaults for their own things that I'm gonna cover briefly right now. It does not mean that you are staking XRP as a proof of stake mechanism, or even restaking based on the current things that we have, like a Marinade, like Lido on ETH or Solana, etc. This is not the same thing. It's different. It's just called so, staked XRP. Because, let me zoom in here. This comes from the actual Firelight's social media. This is from the Medium post. As you can see, Firelight unifies staking and on-chain coverage primitive. Users stake XRP to supply protection against technical failures like smart contracts, bridges, oracles, and economic events like attacks or insolvency, right? So you supply your fXRP to the Firelight vault, not to be earning an actual yield from staking itself, but that bundle of XRP will be used as a protection against technical failures by other DeFi protocols. So essentially, Firelight is going to be acting as an insurance company that is going to be insuring different DeFi protocols, right? And the claims that's going to be made by those protocols, if something happens, if they get insolvent, if they get hacked, or something happens with their smart contract, etc., any kind of issues, then the Firelight will be making the payouts to them. And the fees that those different DeFi protocols will be paying the Firelight for the insurance will act as a yield, in this case, for you as a staker, okay? So as you can see, when the incident occurs, for example, in one of those protocols that Firelight protects, claims flow to a decentralized consortium for transparent review and on-chain payout. So everything is transparent in this case because this is, well, DeFi and actual blockchain and on-chain transactions, enabling credible, scalable coverage that supports institutional adoption. So what coverage means here? It means that coverage equals as a DeFi style insurance. Protocols or users, in this case it's going to be mostly protocols, can buy a protection against smart contract bugs or exploits. So let's say there is a DeFi protocol like Kinetics, for example, right? Lending and borrowing protocol. They can buy an insurance policy from Firelight, and in case something happens to them, to the Kinetic protocol, they get hacked or experience any economical losses or something like that, then the Firelight will make a payout to the Kinetic users using the vault capital that is available because us and you and others are staking XRP there, so there is money there to make a payout, right? But in exchange to that, the Kinetics, for example, will be paying a fee to the Firelight, and the Firelight will distribute most of that fee, I assume so, to those that are staking their XRP in the vaults. Okay, so it's a completely different thing from the actual staking mechanism. It is called staked XRP, but it's staked only as a word, but not as the actual mechanism of how staking works in crypto, right? So when a claim is submitted by the DeFi protocol, if something happens to one of those protocols, it is then reviewed by a decentralized right? That is actually taking a look what's happened, and if the coverage, if the insurance policy, all of that stuff covers what's happened. Everything happens transparently on chain, and if the claim is approved, the payouts are made using the pooled staked XRP, right? So this is what you have to understand. This is the phase one, as they say, but this is not a traditional staking. I said this many times. I will repeat myself probably 5 more times. Sorry about that. But it's just a word, a beautiful word used, staked XRP. But the thing that your XRP will be doing is actually covering different DeFi protocols. The pooled amount inside the vault will be used in case one of the protocols that they cover and insures goes bust. They will use that capital to pay that protocol users, but all the fees paid by the DeFi protocol that is buying the insurance and coverage will be distributed to people that stake XRP. So this is it's a pretty slippery thing that you have to understand before you proceed, because the reason why I'm making most of these videos about fXRP is because people jump on a hype to mint fXRP from native XRPs, but they have no idea what to do and what's the point of minting from XRP to fXRP, right? So this is the same thing gonna happen. The staked XRP is gonna launch, everyone is super excited and hyped, but they have no idea what's happening behind the scenes, where that XRP goes and what kind of things will be done with that XRP, okay? So this is important thing. So you get the general idea what's happening. So when you deploy from XRP to fXRP, from fXRP to staked XRP, you will be getting points on phase one of the protocol launch. So not even an actual yield, at least not a monetary yield. You will get the points. And as you can see, and things you must understand before you proceed, don't jump on a hyped community that everyone is now minting fXRP and everyone is now staking their XRP without knowing what's happening behind the scenes. So as you can see, they say it themselves, and it's a standard public information. Staking, as it is among crypto markets, isn't available on the XRPL. You cannot stake Ripple and XRP natively as you can on ETH, Solana, Sui, and many others. So billions of XRP sit idle on exchanges or in retail wallets. That is true, but that is because it's not how XRP is designed. It's not designed to confirm transactions using staking or use any kind of a liquid staking solutions. It's not how XRP is designed. So whatever they are doing, they are actually manipulating the whole XRP system. They're trying to enable yield on XRP where natively it is not possible. So I'm not saying it's a bad thing. It's a very good thing actually that these DeFi protocols are able to do so and they're able to achieve what they are currently achieving. But the core idea is for you to understand what you are actually doing rather than just jumping on a train, as the whole social media is going to be busting with posts that you can now stake your XRP when staking is not equal to the actual staking, okay? So if robust DeFi infrastructure develops or cross-chain integration improves, this dormant capital could flow into productive uses. That is also true, but with that arrives different risks, because when you stake natively, well, the only thing is going to happen, you will receive an LST back to your wallet, but you have a clear understanding that your staked assets are used for improvement of the network itself, for validations, confirmations, etc. This is not the case on XRP because XRP is not designed this way. So you have to keep this in mind. Now, when it comes to the overview of the Firelight protocol, let me quickly read what's available on their Medium social channel. Firelight protocol is the universal staking layer designed to ignite a new era of DeFi services around non-yield bearing tokens, starting with XRP. So they tell you that an actual XRP and other assets that they will support in the future are non-yield bearing tokens. So the yield is not coming natively. It's manipulated. It's artificial, so to speak. It's not a bad thing, but it's a certain type of risk. The protocol addresses a critical gap in the XRP ecosystem, which is, while liquid staking has driven explosive growth on other networks, XRP has remained largely untapped for staking yield due to the limited DeFi use cases on XRPL. This is also true, but once again, XRPL and XRP is not designed natively like that. Okay? In phase 1, early XRP stakers will be invited to deposit fXRP because the whole Firelight is based on the Flare network, right, into a vault. As an added incentive, participants earn Firelight points to reward their contributions. So when you stake your XRP and get a staked XRP back to your wallet, you are not earning an actual yield, you are getting the points. Those points will most likely be worth something in the future, or when they launch the actual protocol with all of the use cases like the actual insurance, then it will be converted towards an actual yield probably. In later phases, token holders will be able to stake their tokens into the Firelight and earn real yield anchored in economic utility. So once again, it's not a native staking, it's an artificial staking. So they will use that pooled assets, whether it's XRP or anything else, to pay those DeFi claims if something happens, right? So it's a different use case. It's the same as I would say to you, give me your money, I will manage it my own way. I am running a business here, give me your money, right? I will pay you yield on your money, but what I'm doing with that, you will see, but it's not an industry standard, so to speak. Yeah, so give me your money, I will pay you interest or yield, so to speak, on your deposit, but the way I'm going to use your money is different from the rest, because this is what's actually happening. Staking and liquid staking is one thing, and staking using Firelight vaults on staked XRP is completely separate thing. It's different, which is very good for the innovation side of things, but it's a bit of a risk, in my opinion, that you must understand before you jump on this train. Oh, okay? I'm not, by any means, I'm not saying it's a bad thing, but it needs to be a calculated risk, so to speak, okay? Simple as that. So I'm not, discharging this idea or something. I will use this myself, some capital that I have on fXRP. Of course, I will deposit, I will try it out, I will use it if it goes well, but this cannot be your major holdings or something like that. You must understand where you are actually deploying the capital to. Okay, now what can you do with your staked XRP? Because, well, currently, if you mint from XRP to fXRP, you have options. You can deploy to liquidity pools and earn the fees. You can lend your fXRP. You can also lend and borrow against your XRP in USDT and use the borrowed capital elsewhere, etc., etc. So with staked XRP, it's gonna be pretty much the same. Whether you hold fXRP or staked XRP, I'm pretty sure staked XRP will be supported across all of the Flare dexes, the same we have right now, the Spark DEX, the Enosis, the Kinetic as well. So basically you will be able to use staked XRP across DeFi protocols as well. So when you stake your XRP on Firelight and receive staked XRP, a token that represents your staked position in Firelight, you have basically, this will play basically by two roles. First, it earns you part of the usage fees paid by the protocols who buy protection, right? And second, it backs that protection in case something goes wrong. So if one of the protocols Firelight ensures goes bust, it will be used to cover their things, whatever happened with that protocol, right? Even though I really hope that the risk measurements will be implemented on the highest possible level, and because they claim that you will always be able to withdraw back to your XRP the same amount you deposited. So hopefully that's the case, because one of my biggest concerns is what would happen if the protocol goes bust and the Firelight is insuring that protocol and the payout amount is massive and they have to use most of the pooled assets to pay the protocol users. And then if something happens like the bank run, so to speak, and everyone runs and withdraws from staked XRP to fXRP, what if there is not enough XRP in the pool? This is my concern. Of course, I'm pretty sure that as some DeFi insurance companies are managing the risks and it all works fine, I'm pretty sure this will be the same. But this is an added question and an added calculated risk before you jump blindly and stake your XRP without understanding what you're actually doing. So with the staked XRP, you will be able to use it across DeFi ecosystems. You will be able to deposit your staked XRP to Kinetics most likely, Enosis most likely as well. They are launching the loans as well. You will be able to borrow against your staked XRP in USDT and use it to buy more XRP and create synthetic leverage, or use the USDT in other DeFi protocols, etc. Right? And maybe even deploy to liquidity pool, and you're gonna have a pool like staked XRP Flare or staked XRP USDT 0, or even staked XRP fXRP, something like that. So you will be able to deploy it and earn the fees as well. So while your fXRPs are working as staked XRPs, you can still access liquidity, because right now it's the same thing. If you have XRP, you can mint fXRP and use your fXRP across DeFi protocols, borrow, lend, liquidity provision, whatever, right? So staked XRP is going to be pretty similar, but just behind the scenes, as you have your staked XRP position, which the value of that is the same as your fXRP deposit, but behind the scenes, it will also be yield bearing, right? So you are getting more or less double yield. You stake your XRP and you get something in return, and then you can lend staked XRP and get some sort of an API there as well. Usually the LSTs, lending APIs are very low on ETH, on Solana, on Sui, etc., because there is no point to borrow for people to borrow against it in most cases, or to supply it extensively. So the APIs are lower, but still something is possible. So this is a very simple video, just explaining that staked XRP and is not the same as staked ETH for Solana or Sui. Those are different things. So Firelight really did a great job explaining it all, but I'm pretty sure that most of the people will never read it, and most importantly will never dive deep into it, trying to understand what this whole staked XRP is. So the goal of this video is, before it launches, I've tried to explain what is all about here, so you can make a better decision whether to jump in blindly and not over risk with your capital and XRP, and basically to stay safe, right? Because we had our XRPs. I have my XRP since, I don't know, 9 years now, and they're sitting idle, and it's a beautiful thing. It is not the best performing asset yet, but it will be. But right now there are multiple options appearing to try and get our XRPs and use it across DeFi, which is not a bad thing, but every little thing where XRP is involved artificially manipulated through either some sort of a wrapped assets, or in this case staking on XRP when it's not natively possible, it adds a little bit of risks. Okay, so just keep this in mind. But if you have good capital in XRP, of course you should experiment and play the game as well, and a small part of your capital can be used to deposit to Flare. I did it myself. I deployed some of my portfolio to the liquidity pools on Enersys, on SparkDex. I'm earning fees. I'm earning more XRP every single day. This is fantastic, and I know exactly where it comes. With this, I am a bit more cautious because it's not as straightforward as it seems, right? There are multiple variables involved, so just stay safe and understand it from a deep level before you actually jump blindly, because I know what's going to happen. This will launch, and the same will happen as happened when the fXRP launched. Everyone started to mint fXRP, insane demand occurred, but then people are like, okay, so what's now? What should I do with this fXRP? Everyone was minting, I minted as well. What's now? So to avoid these situations, this is the video before it launches, and after we launch the Firelight, I will make a separate video again to show you how it works, of course, and then we will try to understand behind the scenes from a technical deep level what are the risks, how they're gonna manage it, and what is the best possible play to earn the yield and utilize it to unlock more liquidity, borrow against it, and then redeploy to other DeFi protocols. Because in DeFi House, let me quickly show you. As you can see, we are covering absolutely everything. We have lots of people here. We have all of the pools to deploy into. We have all of the technical zones on a regular basis. This is the latest one by our co-founder Rob. So he is always sharing the charts and the ranges, the best possible ranges for different assets to deploy into. You have our active DeFi positions where I show every single position that I have myself. We also have a daily DeFi dose where I cover every single day all the news that happened and the market metrics that happened on that day. So as you can see, multiple posts here. Of course, the general chat where we're all chatting about DeFi and other opportunities, etc., etc. And then below we have multiple educational, approximately 30 to 40 hours of videos, and even more, 3 times more content is coming because we are now launching the upgrade on the platform. So there will be market intelligence, understanding the macro events, how to read central bank statements, etc., etc. And also we are launching the Charts Academy where essentially there will be all the information how to read the charts like a book, so you understand how to participate in DeFi. We also have DeFi strategies where I explain in detail strategies for a specific use case, whether you're coming with stablecoins and want to build cash flow, whether you want to stack more assets like BTC, XRP, ETH, etc., whether you want to build a cash flow business rather than, and you don't care about the assets ratios and you purely focus on the cash flow. We have strategies for that. etc., etc. So it's a very big and wide community that is growing rapidly. We launched 2 months ago and already we have so much good feedback. So I'm amazed to see that. And the aim is to become, well, the biggest and most impactful DeFi community in 2026. So that's the video. Thank you guys for watching. Hopefully it's going to be beneficial. I know it's a bit more technical and theoretical because it's yet to launch. Speaking about the Firelight, but I just wanted to make this a heads up video so you understand what's happening behind the scenes. And when it launches, we will dive deeper and I will show you how it works, how to actually stake, withdraw, etc., and cover all the possible risks of those protocols. So thank you once again, wishing you an amazing week ahead, and of course, as always, I will see you on the next video.